let's look at Foot Lockers. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So here is Foot Locker's website. A bunch of shoes, as we can see, so it really fits the name. So yeah, these are some of the products they have in their stores. So I have a separate theme called clothing and apparel. And you see here, Foot Locker, athletic business. Basically, it's at the 52-week low, 47% away from the highs. So here is the chart of Foot Locker. So this is a stock that goes up and down, and it doesn't necessarily do it with the market. You know, a Foot Locker here, as an example, between 2015 and now, it had multiple bull and bear markets. Here it had the bull market, 136%. Then all of a sudden it decided to have a vicious bear market, 73% loss. Then it had a new bull market. Then between 2021, May, and July of 2022, it had like a 64% loss bear market. So this is a stock that is highly tradable, but you definitively want to have stops in place and very actively manage your position. So this one popped up on my radar because it's doing something that is interesting from a risk reward standpoint. Oops, we go with the blue. So this is a pretty decent double bottom. There's also horizontal support. You also can see here that we have some support levels back here and here as well. So it's a very key level. So yes, the bulls have a key level. Looking at the daily data points, we do see a bit of a undecisive consolidation pattern. So it's not a clean consolidation. Here are some of the news. So Foot Locker seen posting weak second quarter results, could lower outlook, UBS says. So these are bad news, right? But it's really good to get bad news before the earnings. And the earnings are on the 23rd of August. So that actually could benefit Foot Locker because it's not like there's high expectations now ahead of earnings. So that's interesting. As far as looking at like a stop loss level for Foot Lockers, we're pretty close, right? This would be a tighter stop, so yeah, 3-4% stop. Yeah, something like that. Looking here at these other indicators, we are pretty low on RSI and also on the PPOs, not extreme low levels. MACD flirting a bit with a potential buy signal on the weeklies, on the dailies. Accumulation distribution is flattening out, so there's slight bullish divergence. A bit of a sell signal approaching here on the MACD, which is not ideal. So when it comes to the entry signal here for Foot Locker, I would say double bottom, and we do also have horizontal support. So we have a pretty key and clean level. I think I will give the bulls, I give them a 4. I would like to give them a bit more. They get a 4 simply because on the dailies we do see some weakness that isn't really ideal, but it's overall more bullish than bearish. Yeah, let's look at the seasonality. So to the left, it looks pretty bullish here into 22nd-ish of August, which could mean that Foot Locker has a bit of a tendency to go on a rally into earnings, which could benefit us if we take the bullish side. Seasonality here in the table. So far, we have a 7-ish% loss for August. August can be a bit of a red month. So already we have seen some of that pessimism of August. September, though, is it the best month? No, but it is one of the best months for Foot Locker. It's a pretty good month. As far as the number of times where it closes green, it's yes, it looks like certainly one of the best, if not the best. So the seasonality here is pretty promising. So I do think I will give the Bulls a 6 on the seasonality. This is good. Then we go to the fundamentals. So you can see that we definitively have a volume shelf right here and right now. We do see that the price book ratio is very low. Price to sales, price earnings. So there's a lot of like bad news priced into this stock. Looking at the forecasts, so we have 18 analysts with a 1-year price forecast, and the average price target is 27% above us, highest is 99% above, but you do have those who see a 12% downside. The analyst rating is very neutral. So yeah, a very large number have just hold rating on Foot Locker. So I think that when it comes to the fundamentals, it's pretty good. And another thing with Foot Locker is when we go to the overview. So here you can see the dividend yield. So it definitively is one of those yield stocks. So yeah, when it comes to the fundamentals, that was one of the best parts of Foot Locker. I think I will give the Bulls a solid 8 on the fundamentals. A lot of bad news is priced into the stock. There is pessimism from UBS now heading into the earnings. And of course, the market reacts quite quickly to those kinds of news. Hence, that might be priced into the current price of Foot Locker, which is contrarian bullish. Now, let's do some relative performance analysis. So we will now look at sectors which Foot Locker is very most correlated with. So consumer discretionaries is one thing. And then you have XRT, which is retail. Like that. So these are long-term correlations. So we do have a 20% correlation with S&P 500, 43% with consumer discretionary ETF, and 78% with retail. Daily data points, minus 80% here with the S&P 500, minus 78% with the consumer discretionary, and 23% positive with XRT, the retail ETF. So what happens with XRT is going to have an effect on Foot Locker. So XRT, it's been on a bit of a rally, but now pulling back. It certainly has these time cycle patterns. Could be a declining cycle now in development, which is not ideal for Foot Locker. Daily data points, yeah, we don't have any like clean support at the moment. Seasonality is, however, bullish, though messy bullish into the end of August. Looking at the table view, we so far have an almost 4% loss for August, which is on the higher end of the spectrum. September is usually actually bearish for the XRT. Now let's compare Foot Locker with the XRT. XRT, retail. Okay, so this is very interesting. On RSI, we are very, very low, which means that Foot Locker has abnormally underperformed the XRT. Looking here in blue here on the bottom, we are at support in this pair. Dailies, yeah, pretty clean support. Seasonality definitively favors Foot Locker going forward. So yeah, almost 3% loss now for August. We have seen more underperformance recently, a bit more. But then again, September is, it is the best month for Foot Locker in this pair. So it definitively is a month where we usually see Foot Locker outperform the retail ETF. So yeah, when it comes to Foot Locker, This is really getting, yeah, it's getting pretty interesting. So for relative performance, I think I will give a 7. This is just good. 6.3 in favor of the bull's double bottom horizontal support. However, we always want to have an exit plan, especially with a stock that is erratic like Foot Locker. The great thing, though, about this wild behavior of the security is that even if we do see that a full breakdown in the S&P 500, it doesn't matter for Foot Locker because it's sort of it's its own animal. We saw that with the correlation as well. It's just an odd thing. Part of the reason could actually be the dividend is that like during uncertain times, especially when the Foot Locker stock is low, then you will have mutual funds who are they have to stay long in the market. They will just buy Foot Locker to get the yield and also get some nicer valuations. But I do want to have a stop on this position, and I do think that like if there are bulls out there, 5% stop loss level. It's a bit of a wide stop though for the stock. Yeah, 3%. Yeah, maybe something like 4% stop loss level. I don't want to see anything more. You could, of course, go a bit tighter as well. Because we are now at the same level we were back here. If we look a bit here at the dailies, so what is the low end here? Yeah, so to go below that level would be 3% stop loss level. You don't want to see anything more really. So yeah, I do think that Foot Locker it's a pretty interesting bullish case. Quite a few data points pointed in a bullish direction. Like buying a stock before earnings, it's of course there's risk in that, but there's always like moves in the market, and the big moves can also be the most beneficial as well. So if you have like a policy where you don't want to be active into the earnings, have like a position, then you will also miss out on the times where there's a positive surprise. And UBS being a bit gloomy on Foot Locker, setting the stage maybe for some additional disappointment, that could be beneficial for the stock. But yeah, I think the stop loss level is pretty clean. If it goes below that level, then the thesis just isn't strong. Because a concern people have, of course, is that they can get shaken out of a position. If they have a tighter stop loss. But the thing is that there will be a lot of times where that will also protect you from the big losses. So sure, you will be shaken out, quote unquote, a few times, but you will also avoid like the 20% loss or the 50% loss and stuff like that. And the bulls should, if they are out there, act on Foot Locker like soon. That's the thing. And I will add a bit of bullish sentiment to the security now, but I do want to have my stop as well because there's bullish trades and there are bearish trades, and the bull trade should go up. It's not bullish when it goes down, and the opposite is of course the case with a bear trade.